Hello, welcome to another edition of Money Ideas. Here are 3 charts that change the way I think about big tech, energy markets, and the future of digital assets. Starting off with billionaire investor Warren Buffett and his company Berkshire Hathaway, which basically bought an additional stake in Google. And that came out in public disclosures for the third quarter, and it caused the stock price to move. It's significant in a couple of ways, and I'm going to run you through that. A, in terms of the magnitude of the stock price move to the upside. So since the news broke, we're looking at gains of about 20%. And then you look at how the stock has been performing so far this year, and it's been nothing short of astounding, right? So we're looking here at gains of about 70%. You compare that with, say, Nvidia, which has upside of 30% so far this year. Now, how much did the Berkshire Hathaway investment team decide to allocate into Google? Well, they decided to put an additional $4.3 billion of capital to work there. And it also tells a little bit of a broader story in terms of what this means for how we think about AI and how we think about what Google brings to the table. Because this is about the tensor processing units, the TPUs, and they're taking on Nvidia's graphics processing units. So the way to think about these TPUs is that they're able to train AI models a lot more cost effectively, and that has ramifications for the whole AI complex. And you think about GPUs, they're traditionally great for video games, and what Google has tried to do is to learn and to improve from what Nvidia has been able to deliver. And as a result, you're seeing a serious threat to the Nvidia ecosystem. It's easy to switch technologies, just like when you think about your phone, right? So Samsung or Apple, it's very easy to kind of pick up the phone. It's very hard to commit to a proper ecosystem change. And that's the same case with AI ecosystems, right? So now Google owns the chip and the software stack. And you could argue that every AI company out there is paying some sort of Nvidia tax, right? The model is expensive, the compute is expensive. Nvidia, for their part, they're brushing off all of this, as you would expect, in terms of potential threat to their dominance. And in a post on X, this is what they wrote, direct quote, I'm reading it for you. Nvidia is a generation ahead of the industry. It's the only platform that runs every AI model and does it everywhere computing is done. So the real question then is not necessarily who's going to win the AI chip war per se. It's probably going to come down more on who's going to win the margin war. The other chart I want to focus in on is about gasoline prices. So in the United States, for example, the average as of late 2025 is $3.67 per gallon. In the United Arab Emirates, the average is about $0.7 per gallon. But in both of these cases, there could be more downside and more relief at the pump. Research out from JP Morgan and Goldman Sachs with some big calls for the future of the oil price. So in the case of JP Morgan, they're seeing $30 per barrel. For Goldman Sachs, they're seeing $40 per barrel. And in both of these cases, you have to bear in mind that so far this year, the Brent International Contract, which is such an important reference point for all of the retail outlets around the world in terms of how they price their energy, that is down 14% so far this year. And now there's going to be another wave in 2027, right before that, of more crude oil coming to the market from OPEC plus producers as well as non-OPEC producers in the Americas. And so both institutions are saying that that additional supply has to work itself through the system. And then you look at what's going on with the ongoing negotiations between the United States, Russia, and Ukraine. Maybe we get a peace deal. And if it's meaningful, that could weigh on energy prices as well. Think along the lines of what would happen to sanctions, what would happen to restrictions on Russia. And then if crude oil goes down to $30 a barrel, well, that could mean that gas breaks under $3 a gallon nationally. In the meantime, it could bounce back again after 2027 is what the scenario is saying, because Russian supply could decline more sharply. You think about what Vladimir Putin, the Saudis, and the United Arab Emirates are thinking about, well, they don't really care about what this Brent contract is doing today. What they really care about is what their reserves and their capacity is going to do all the way out in 2030. And we saw evidence of that from the Abu Dhabi National Oil Company. Just in the last 24 hours, they came out and they said, look, we are still committed to the $150 billion of spending over the next 5 years because they want to grow in production and they want to expand around the world as well. And then the biggest public Bitcoin whale has stopped buying Bitcoin. This is Michael Saylor, who runs and owns a large part of Strategy and the company formerly known as MicroStrategy. This is the largest publicly traded company holding Bitcoin. And for 6 consecutive weeks, they had been buyers of Bitcoin, and now they've taken a bit of a break. And you look at the price of Strategy and stock, and you can understand why they would do that. So year to date, you look at that chart, so far in 2025, we're off 70% from the peak that we've seen throughout the year. And now at 1.16 times multiple to net asset value, which is the lowest that we've seen this cycle. Enter into the equation MSCI, which is a backbone of how a lot of institutional investors approach these markets. And according to JP Morgan, MSCI is concerned, and they're worried about companies that are allocating more than 50% of their total assets to crypto assets. And so what MSCI appears to be considering is excluding companies like Strategy and from the index, which would have huge implications for Strategy and other companies of similar composition. Institutional investors use indexes from MSCI for all kinds of things, right? So you think about the MSCI World Index, the MSCI Emerging Market Index, and then you have also the MSCI All Country World Index. And those are used by the likes of sovereign wealth funds. So that includes the PIF, the Public Investment Fund in Saudi Arabia, pension funds, insurance portfolios, European retail retirement systems as well. Michael Saylor's already come out and responded, right, to any suggestion that this could be a risk. His point is, and he posted this statement on X, Strategy is not a fund, not a trust, and not a holding company. We are a publicly traded operating company with a $500 million software business and a unique treasury strategy that uses Bitcoin as productive capital. That is very powerful. That's all we have for this edition of Money Ideas. If you want next week's charts the moment they drop, make sure you hit that subscribe button. Thanks for watching. See you next time.